Hello, everyone. Thanks for joining this next session. I have Alex here from AVASK. We just talked to the AVASK EU UK team. Now we're talking to Alex, Business Development Officer at AVASK from the US team. He's going to cover US e-commerce tax compliance for brands that are wanting to expand to the US, or even if you're based in the US and you just don't have a lot of knowledge on how tax compliance works, he's your guy. So with that, I'll kick it over to Alex.
Yes, thank you so much, Fran. And as Fran mentioned, my name is Alex Hansen. I'm one of the business development officers here in the US. So I'll be going over multiple different situations today for people who are located outside of the US and for people who are also located here within the US as well. So what I'm going to do, I'm going to go ahead and share my screen and just give you guys a brief introduction of who AVASK US is and how we basically assist clients. So yes, as mentioned, when it comes on to say U.S. tax compliance and roadmap, this is where AVASK specializes in within the e-commerce fields. So for the people who are not familiar with AVASK, AVASK is a full-service accounting firm that assists e-commerce sellers with bookkeeping, business registration, sales tax compliances, global expansion, income tax preparation, advisory services, and much more. One of the good things about AVASK is that all of the work that we do here in the US is done in-house. So if you have any questions, any concerns, you are more than welcome to connect with us and get live assistance, or even connect with your account manager and get that live assistance that you require. During today's sessions, I know we only have, say, the next 10 to 15 minutes, but I'll be going over 3 different real client examples of how we assisted clients from different point of views and also from different parts of the country as well. At the end, there will be like a live Q&A. So if you guys have any questions, you guys could save them towards the end. Or if this is something that you guys would like to just discuss now, by all means, this is something you could drop a message in the chat, and then you will have my colleagues roam in the chat box, making sure that all your questions and concerns are being answered as well. The first example that I would like to go over is the client A. So Mark is a client of ours who is based here in the United States, and he's based precisely in the state of New York. So Mark has a US company that is selling in the US market on his own website. So what Mark decided to do is basically store inventory in a 3PL, such as ShipBob, in a state like, say, New York or California. The reason why Mark chose the state of New York or California, that's based on his unique situation. Mark decided that it is best for his clients to receive the inventory from a New York location or a California location. So what we did for Mark is basically to make sure he's staying compliant is first register his company with the IRS and also the state. And this will allow Mark and his company to engage in business and trade compliantly here in the US market. Once Mark has everything registered, all of his foundation and all of his formation documents, Mark then decide go ahead and take the next step of registered for sales tax in all of the 3PL states where his inventory is being held, and also any additional requirement that the state may bring on upon Mark. So
Hey, Alex, can
yes.
you share your screen or go to the next tab? Sorry to butt in. There we go. And can you present it as well?
It is. Can you see it?
Can you go to present mode? I think it'll make the screen bigger for everybody.
Got it. Where are we talking?
Yeah, down there, I think.
Yeah, this one.
Yeah. Okay, cool. And then just click to the next. This is the good slide, but we didn't see the slide at first. So I just think you just forgot. I just want to make sure you could see. Yeah, you're good. I just want to make sure people could see the slide that you were talking about.
Got it. So can they see it?
We can see it. Thank you.
Got it. No problem. So as was mentioning, so the next step what Mark went ahead and did is basically register for sales tax in the 3PL states and review any form of additional requirements. What that means is that Mark has some form of physical nexus in the state of California and also in the state of New York. And by law, that requires Mark and his company to register for sales tax within those 2 states and start collecting and charging sales tax onward. What Mark is also required to do is basically complete monthly bookkeeping and prepare financial statements. This is one of the most key components because this is what is going to be used to report all income to the IRS throughout the year that Mark generated through his business. So once Mark completes this on a month-to-month basis, at the end of the year, he doesn't have to basically be rushing through the process or trying to find different documents because everything was already organized throughout the year. And then once Mark have all of this organized, we would then complete the annual tax requirement on the federal level and also on the state level based on the state that he's located in and based on his requirement. Very, very straightforward for Mark. Mark operating as a U.S. company and also a U.S. resident. In another situation, you have Sarah's situation, which is a little bit different. So one of the key components you will see here is that Sarah is a UK resident operating with a UK-based company that sells within the US market. So yes, you can sell in the US market with a UK company, and you can also be a non-resident here in the US. In this case, Sarah is selling on Shopify, and she sells across all of the 50 states within the US. And Sarah, once again, decides to store inventory in the state of Texas because she finds that best for all of our clients in her unique situation. So what we did go ahead and do for Sarah so she could remain in compliance is register her UK company with the IRS, and this will allow Sarah to trade business and engage in business within the United States. The next step that we went ahead and did is basically register Sarah for a sales tax within the state of Texas, and that is due to Sarah holding inventory within the state of Texas. She now has a physical nexus by law, which requires her to register for sales tax and stay in compliance with sales tax throughout the year.
Hey, Alex, if you can click to the next slide. Yeah, there you go. I think you're going to have to manually click them and see them on the screen because we didn't see Sarah, but keep going to the next one.
Got you, no problem. So you can see this slide right now. You guys can see it?
Yeah, we can see it.
Got you, no problem. The next one is basically John. So John is a UK resident operating a US company. So the previous slide, as I mentioned, you had Sarah, who's a UK resident with a UK company. This situation is John, who is a UK resident operating a US company. So John decided that, hey, I do not want to basically sell in the US market with my UK company because I think a US company will be much more beneficial to myself. So John went ahead and basically incorporated a US company, start selling on his own website, and start making sales in all 50 states. What John also decided to do is that John is selling so much and his company is so big, he decided not only to store inventory in the state of Texas, but in 2 additional states as well. So John is storing inventory in Texas, New Jersey, and Pennsylvania. What we went ahead and did just so John could stay in compliance is register his U.S. company with the IRS and also with the state, which will allow him to trade business effectively and compliantly. The next thing that we went ahead and did as well is register for sales tax in the 3PL states and review any state requirements. Some states may require you to register for sales tax alone. Some states may require you to register for sales tax and also franchise tax. But this is where we come in of making sure that we sit down with you and understand your unique situation and making sure that we're advising accordingly and correctly moving forward. In regards to, say, John, annual tax obligation, John has the ability to basically complete a U.S. tax return for his U.S. company, which is mandatory for everyone. But alongside that, John has the ability to complete what's called a tax treaty, which allow him to make income here in the U.S. and declare all of his income or corporate taxes in the country of domicile. And in this case, this will be the United Kingdom. This process can be applied to many different countries. So not only in the UK, for other clients or other members that I've seen in the chat that are located in, say, Germany, in Spain, anywhere outside of the US that has a tax treaty, this is something that the expansion process could be very simple and very easy for someone to complete. Time frames. The timeframes are always going to vary based on how you're looking to expand here in the US. These are some of the standard timeframes that you should be aware of. As mentioned, you have the EIN. That usually takes 2 to 3 weeks in order to obtain. You have the sales tax registration certificates. That usually takes 4 to 6 weeks per state. You also have the ITIN, and this usually takes approximately 6 months. Once again, obtaining an ITIN is a unique situation, and this is something that we'll have to discuss your situation to see if you need a ITIN number in regards to, say, the corporate tax return. This is something that usually completes on March 15th or April 15th, and this is always based on the entity type that you're using to sell within the United States. In regards to, say, the closing remarks, something I just wanted us to make sure that everyone is aware of is that we are called the United States, of course. However, I usually tell clients or anyone that's looking to expand in the US market that we are united countries. The reason is because that we act very independently with each state. So each state has their separate rules, their separate regulations, and also their separate responsibility. And that's why it's very difficult for individuals to navigate the rules and the requirements in all 50 states, because there's different deadlines, there's different filing frequency, and there's just different tax obligation that you must follow per state. Here at AVASK, we make the process very, very easy for someone who's looking to expand in the US, whether you're located domestically in the US already, or if you're located from an international country. We offer a full hands-off experience for all of our clients while providing full transparency, advisory services, and research to make sure that we are staying on top of all of your compliances throughout the year in the entire United States. In regards to, say, any questions or concerns that you guys have, or if you wanted us to discuss your possibility of expanding into the US, or if you're already selling in the US and you want to stay in compliance, you have my information here, which is Alex Hansen. And once again, you have my email for myself and also my colleague, Jovel, who will be delighted to assist you both or assist you all in regards to all compliances that you guys are seeking. At this moment, just want to see if you guys have any additional questions or concerns before we basically close this chapter and make.
Yeah, thanks, Alex. Post some questions if you guys have them in the chat. I know that this is very specific to each brand and you might have more complex questions. So if it is something complex, maybe go to the booth and then schedule some time. But I guess because we have like 2 minutes left, a brief question, I guess. And this is what we get asked a lot because I think brands are trying to prep maybe 6 months to a year in advance when they're looking to expand internationally. Alex, I know it's very different for every country based on the registration processing time and what country usually, how long the timeline for each country usually takes, but how early should someone be looking into this, at least, like with not even just submitting the paperwork, but looking into expanding? When should they be talking to AVASK and your team so they have enough time to get the registration done and then everything else, so they don't feel like they're kind of running and, oh, I'm not going to hit my timeline actually?
Yeah, I usually say 4 to 6 weeks, but prior to that, I'll usually say roughly about 3 months, because obviously once you're sending over products, some products might be subject to, say, import and duties and things of that sort. So that's another component that we assist clients with as well, of making sure that their goods that they're selling in the US is able to basically be sold in the United States prior to them even doing any form of registration or doing any form of compliances. So 2 to 3 months or 4 to 6 weeks, just to make sure that you have everything up and running and have all of the necessary research.
Great. I think that was a good timeline, because now it's making me seem like brands should probably start now if they're planning to do anything in Q4, expand internationally before Black Friday, Cyber Monday. So good timelines for everyone. Again, go to the booth for AVASK if you have questions based on US tax compliance for e-commerce, and then we're going to cook it over to the next session. So thanks, everyone, and thanks, Alex.
No problem. Thank you. Enjoy the rest of your evening.
Bye.
Is this